All right, October 1st, live day trading. All right, so every morning I have to recite my rules so I remember what I'm doing, so I keep focused. So the rules for trading are going to be to scan, to survey, and to submit. I'm going to scan the market for my particular stocks that I'm looking for that are going to meet my criteria. Then once I find those stocks, I'm going to survey. I'm going to survey the charts. I'm going to find support. I'm going to find resistance. I'm going to find different areas where I may want to sell or buy. So let me see. I'm sitting here. There we go. Okay, it's got some reset. Scrolling through, I have 5 stocks so far on my scanner. Let's see what we have here. All right, my focus is always kind of distracted from talking, only because I'm focused so much on the charts. I've been taking videos of my trading, just kind of started, and I realized I just have to take notes of what I'm doing, mental notes, why I'm getting into the trades, why am I got to be able to document. I got to be able to log all of these trades so I can run my analysis to really find strategies with edge. So I'm used to just kind of trading quietly, but then I go back, look at my trades and going, God, what was I thinking? What was my thought process? So really the purpose of these videos now is for me to be able to look at my thought process, understand what it was I was thinking, and hopefully gain some insights on setups, on probabilities, on statistics. That way I can run all this data through my algos and see what edge might be there. All right, so right now I have 8 stocks that have shown up on my scanner. It's really weird to talk and to scan and just trade at the same time, but I really think if I can get in the habit of articulating my ideas, articulating my entries, my exits, and what I'm doing, I think if I can really tag and identify verbally what I'm doing, maybe it's going to help me be more consistent. Okay, I have eight stocks right now. See a cron. And I'm going to sort these stocks by, so GE, 74 million. Oh my God, look at that. I just saw this article on Bloomberg because of how much money they've lost, almost $500 billion. So let me show you GE's daily chart here. This is crazy. 31, 31 bucks. I mean, all the way down. Whew. Wow. I mean, they are just they're losing so much money. I don't know what the fundamentals are behind that. I don't really care. I just look for intraday opportunities. I got to remind myself every day. Oh, there's my timer. Okay, first 5 minutes of the morning is almost up. The first 5 minutes I spend really just looking at potential charts, see what pops up on my scanner, and then whatever pops up, that's going to be what I'm looking at through the rest of the day. All right, and it just hit 9:35. I have 10 charts on my scanners. 10 symbols. So let me scan through these real quick, starting with the highest volume down to the lowest. So GE, cron, SQ, BK, X. All right, so the first thing I want to do is I want to get rid of the, okay, so FWONK, whatever the heck this is. Let's get rid of this. Not enough volume. Okay. All right, let's see. So right now that I have these, now I've got 9 stocks. I am simply looking for possible areas of support and resistance that I may want to place trades. It has to be repeatable. That's the big thing, right? Running this data, I gotta be able to repeat what it is I'm doing. GE actually seems like it may hold this. God, look at that, 63 million shares. Wow. Wow. That's a lot of money. That's over $500 million. $500 million, right? So I'm looking for some kind of, I'm not seeing a lot I like. I look for some kind of area of consolidation. This is actually looking pretty interesting right in here. So what happened? 100,000. Actually, I like this area. So what's the spread on this? 10-cent spread. That spread's a little bit big. I like this area. What is that? 42-cent range on that candle. My stop would be about 30 cents. Just I kind of base my stops on how far the stocks moved in the day and then use a percentage of that. So if I know I want a 30-cent stop, I would have to get in around in this 20, and I can set my stop right above here, this rejection right here. That's actually what I think I'm going to do. So I'm going to go ahead and put a sell order. Do 25. The height of that is 53. Actually, let's do 30. Because it rejected and it shot down. So here was like a rejection candle, and then look at all that volume coming down. So if it comes back up into this area, I like it, and I just want to put my stop above this candle, which is 53. I want a 30-cent stop, 30, so that would be perfect right there. So let me, okay, so this is not real money trading. So I put my shares in as a representation of where my stop loss would be. So that way when I'm running everything through my algos, it's just a way to collect more data on what I'm doing. Can't really go into it full detail right now, but okay, so that order is setting there. Who knows if it'll get hit. This is interesting. So this, yesterday, the high was 2240, which is this area down in here, or 2250 around in there. Let's see what else we have. I have no idea if that's ever going to come back up to that. This is also, I like this break too. This is kind of what I like to see. I like to see an area of congestion and then a strong break away from that area. Strong break. So this kind of got congested, right? You see price at this area, and then volume, and then huge break. So I like that as a pretty solid area of resistance. See what else. So I'm just going to scan through these stocks, and see what may come up. And this is the part of trading that's, you know, not terribly exciting. Just sitting here and waiting for something to hit the criteria that I like. Okay, this GE looks interesting. So it had a level here and it broke through, and that's where I like to see that strong breakaway. So let me truncate this volume so I can kind of get a better idea. Let me see, edit. So this volume is all fairly, I mean, you had this huge, you know, and then these are all, what, 4, 5 million, 3 million. So it comes up to this area, where would be, so this was kind of the last fight right here, the volume, before it started coming down. So my stop on this would be tight. I'd like it at about 6 cents. Because this stock today has only moved, you know, 60 cents or so. So 6 cent stop would be about 10% of that total move, which means I'd have to have price come all the way up to here. If I set an entry here, look, there was, you know, it might stop me out in this 10 cents. But I don't want a big stop, because then it's going to be hard for me to get a good 2 to 1, a minimum 2 to 1. And I always want at least that. Some of my strategies actually are better off at 4 to 1. But, you know, 2 to 1 is minimum. So I'm going to set a sell order. And let's see. That was the last battle right there, 96. So I'm going to do 90. And I'm going to set it for an 8 cent stop. Again, this says shares, but this is, you know, this isn't live money. So I'm using the shares as a representative of my stop. So that way when I print everything out, it'll tell me shares 8. But then my algos know that that shares really means my stop was 8. And it's a way to keep me honest. So that way, you know, I know exactly what I was doing. Okay, so there we go. If it comes up and hits that, ideally what I'd like to see is just a quick run up on light volume. I like to see it come up with light volume, and then I would, you know, if it comes up light volume, kind of tags it, it'd be great. If it really starts to build a lot of volume here, they may be people building positions to the long, which I don't want to see. If people are really buying and building positions to the long, then I don't want to be shorting that. Yeah, that does not look like it's going to come up. If you hear this grunting in the background, that's my new baby daughter, only a couple weeks old. I bring her down with me to trade, give the wife some rest as she's up with her all night. So I'm like daddy day trading over here. So the reason I'm getting this info live day trading, as opposed to just running like back tests, is I find back tests, I don't know, maybe I'm just not doing stuff right, but I like seeing how the markets move. And I like seeing what the spreads are doing. I think if you just run blind back test, it doesn't give you a familiarity with the markets. It's like trying to write a French novel and you've never been to France. Like, yeah, maybe you can learn the language, but you have to experience it. And I think that's the same thing with trading, is you have to experience the markets daily for months, years on end, to really kind of get a feel for it. And I'm still working stuff out. I don't have everything figured out by a long shot. But just being here every day, looking at these charts, getting a feel for it, building strategies, around live markets as opposed to just back testing things. I think it's more beneficial, but who knows? So this is kind of building up. This is interesting. We hit some volume up in here, 40,000 shares. And it's making a, this might run back up. I don't like this. I'd like to see this GE come back up to my level. One of the things I'm working on is really just not chasing things, man. October 1st. This year's gone by so fast. Alright, I'm just going to go ahead and continue to scan these charts. I usually will go up until about 10:30. See, SQ, God, SQ's been in play for the last couple days. If you look here, this was nice. This gapped over this like area and then it shot up. It's been in play, but what I don't like about it is look at all this congestion. Who knows what the hell's going on in here? If you were gonna buy or sell this, I'd probably do it from one of the extremes. Wow, look at that one, it's coming down. Look at this volume too, look at that. Look at that volume picking it back up. Viking Therapeutics. I like mid-large cap stocks. Not really a big fan of the small caps. I mean, my price range is between $10 and $100. So it's kind of whatever picks up in that, but I'm not a huge fan of the low float stuff. This may work its way back to VWAP. This actually may be interesting at VWAP. You have this area right here where price came down. The thing I don't like about it is it didn't make a lower low. I would have liked if price would have broke from this area and then made a lower low and then came up on light volume. But if VWAP comes down to this area, it's too early in my opinion. If VWAP comes to this area and you have this level right here, then you kind of have two factors, kind of a confluence of events right there that may be a viable trade strategy. I'm really focusing on trying to place trades that I can repeat, you know, that I can analyze, that I can go, hey, I can do this trade 1,000 times and then run the stats on it and go, hey, how does this trade work? I don't like flying by the seat of my pants and then, you know, I was doing that too much before. I would analyze my trades and going, Jesus, what the hell? Like, where's my strategy here? What am I doing? So I'm really focusing on trying to enter into trades that I could repeat 1,000 times over and then run the stats on that. And go, hey, on this particular setup, I should go for a 2-to-1 profit to loss. On this particular setup, I should go for a 4-to-1. On this particular setup, a 1-to-1. I don't really believe in having like a standard stock profit to loss ratio. I would like at least 2-to-1 on every single trade. But you know, if you can find a trade that works out 70% of the time in your favor and it's only a 1-to-1, dude, that's edge. That's edge. Trade that. On the other hand, you know, you find trades that only work out 30% of the time, but you get 4-to-1. I mean, that's awesome. Most people can't handle losing 7 out of 10 trades. But if you can lose 7 out of 10, but those 7 you're only losing like 1%, but on those 3 trades you win, you're getting 4%, so you've won 12. So you're up 12, down 7, gives you a total of 5% you're up on 10 trades. And that's sick. That's edge. I'm just gonna keep scanning here. So now what I like is there was resistance here. It did come up to it. See, and this is one of the quandaries I find myself in consistently, is where to set, you know, this looks like a good entry, right? Because it's right here. I've just had so many times where it comes up through it, because I like tight stops, because I can get bigger profit to risk, right? So I don't know, but that's kind of a bias I have, right? Maybe that's not a good strategy. Maybe I should go for 1-to-1. But that's why I'm doing this. That's why I'm going to make these videos now. That's why it's really going to help me be more analytical and being able to detail my trades, why I'm getting into trades, why I'm getting out of trades. Before I would just look through charts of things I've traded, and I didn't really have a good, you know, I was taking a journal after the day was over, I'd write, but a lot of times, you know, an hour and a half later, you don't always have the same thought process as when you're doing it live. So making live videos, you know, I feel is just going to be a better, and that way I'll have them. I can look back a year from now, look at this video and go, oh, hey, why did I get into that? What strategy was I trying to develop? Okay, on this GE, it really kind of seems like it's creating like this wedge pattern. So I would set a stop. Let me see, right here it's 71. All right, so let me see, if it's 8 cents, 71, that means I'd want to get, let's say 65 actually. It looks like 65, 8, 73. Yeah, I think that would be good. Is that gonna change? Come on down, baby. Right there. Maybe. It says modifying. Okay, what happened? There's a prom. Awesome. Well, it looks like it did modify it, so I don't see a lot of reason. It is running on this, but excuse me. This moving average, I don't pay too much attention to it. I could see price coming, because this, and again, I'm still working on the probabilities of this, and I'm still trying to figure out the statistical relevance of this 9 EMA. That's what this is, a 9 exponential moving average. But it just seems that price a lot of times will have a reaction around the 9 EMA. So that's just something I've noticed. And again, it's the thing with trading, you notice things, they kind of stick in your head, but doesn't mean there's any kind of statistical edge, doesn't mean there's any viable trading strategy behind it. It's just something you notice. I noticed a lot of things that I don't really know how to trade it. Just because I notice it doesn't give me an entry or exit. It just, that's something I notice. So again, that's why I'm doing this live day trading, these recaps, so I can have a history of data, just a big data frame that I can go through. And, you know, I collect all the chart data that I've been doing, and I'm building algorithms around the chart data, but having live commentary on my trading and what I'm doing and why I'm doing it. I think that's going to be, it's going to increase my profitability, I believe, at an exponential rate. It's really going to give me deeper insights than I've had previously. This may end up breaking and not even coming up. So ideally I wanted it to come up because I wanted to set my stop really above this level right here, this 72. So set my stop around 75, but I only wanted an 8-cent stop, so I have to get in at 65. I'm sorry, 73 is what I was thinking. That was 72, so above 73. So I was hoping price would come up, tag it, and then maybe come back down, because I'd only need price to move 16 cents. And that would give me 2 to 1. The cool thing about stock like this, look at that, 700,000 shares, 1.3 million. You can take some size. I mean, you can take some, you know, these low float guys, you know, whatever. I love this because if you figure this kind of stuff out and you get some size behind you, I mean, granted, these type of setups don't happen every day, but you get some, you know, you get to become a big player, right? And you can push around some weight. Dude, you could take 100,000 shares. You can take 200,000 shares of a stock like this. You know, 200,000 shares, 1280. Wow. I mean, that's okay. Cool. Tag me in right there. Let's see what happens. Let me truncate this. See what happens. Now, what I didn't like about this is I didn't see sellers coming in. So that had me at 65. All right. Now what I don't want to do is I don't want to watch it. I like getting into a trade and then moving on. Oh, actually, I lied. I have to set my stop. So 8 cents is my stop. I got in at 65. I need to set my stop at 73. 16. So I gotta go to 49. It's gonna be my profit. There you go. That's my trade. We'll see what happens. We will see what happens. What else do we have here? This is actually a pattern I like. I wasn't really paying attention to this stock. So what you have is you have this engulfing right here, right? So price made a big run down, and look, the 9 EMA like I was talking about earlier, and it also happens to be, so if we scroll over this way, look at that previous area came back down right around in this range right in here, found support. So you have a lot of different, see, and I didn't see this, and this is why I do live day trading, because it's easy to run algos, but you may miss stuff. You know, the algos are going to catch stuff you can't. So eventually I want to build algos to trade for me, but right now I still want to trade myself. But the bottom line is this came in, it's kind of a narrow range bar, pushed down, wasn't able to keep a lower low, and then came up higher. So it actually engulfed, and now we're from 75 to 20. I mean, look. I mean, that's a good setup right there. Man, I'm bummed I missed it. That's such a good setup. Man, Look at the volume too. Look how low the volume is right here. Yep, didn't even multi time frame analysis right there. Wow. You wouldn't have been able to take huge size, but it would have been able to do some damage. This is interesting right here. This is very interesting. So it made a run up, and look at this volume. Had this bigger volume, but it wasn't able to make that big. So look at this move right here. Look at that. That's a 17-cent move on 15,000 shares. This is a 17-cent move, or range, I should say, on 33. Oh, well, now we are picking up a little bit. If this shoots down, so if this comes up with a lot of volume and rejects and comes back down, that looks like it might be a good place to sell. Just take a note on IRDM. Uh-oh, look at that. It's going to hit my stop. So far came right. Look, the high was 72. I set my stop at 73. See, on stocks like this, you can do that. You can have that penny or so because there's so much volume. There's such a huge float. I mean, you know, it's not as whippy. It's hard to take an 8-cent stop on like a low float. So let's see what GE is actually. Let's see. I'm on FinViz. Yeah, market cap of FinViz. I'm on finviz.com. You go, the market cap GE is only 100 billion right now. It tagged me out. Oh well. Well, so that's another one for the data books, right? I have the data. I can see what I was doing. Mark this trade. I have to analyze why I got into the trade. I saw resistance up above. It was coming down. I'm going to mark where I was at in the daily range. So yeah, it says income on FinViz. Income is minus, what is that? Oh, 3,590,000,000. So that's the income of GE. Wow. Their income is minus 3 billion. Jesus. So next area, right up in here, GE might find. Yeah. So that's the other thing. This, yeah, it never broke. Did it break below that? Below 77? I don't think so. 56. Yeah, so you had this low right here, never broke. So that's kind of that. I mean, that's really what this was anticipating. It was an anticipation to come in and break this low, but it did not. So that's the okay, so that's low of day, break, anticipation. That's kind of what I was doing. So I saw very strong downward movement, a lot of volume. So this is the other thing. Let's see. Watch it come right. That's I set my stop. I do this sometimes, man. I set my stop in the exact wrong place. But again, that's why I'm gathering the data. That's why I'm gathering it. Because if I look at all my trades and go, hey, I'm just barely getting stopped out, I need to be patient, get a better entry, and then I can have a better profit. But that's why I gotta look at the data. Gotta look at the data, man. Spent thousands and thousands of dollars on day trading courses and education and all this stuff, and none of them really detail how you're supposed to look at your data. I'm a very process-oriented person. I like having a process. I like building systems. I like doing that kind of thing. And a lot of the courses I took really didn't. It's like, oh, here's a bull flag. Here's this. Here's that. And there wasn't really like, well, how do you analyze it? How do you figure out what the profit to loss ratio should be? How do you know what's the win rate with that profit and loss ratio? There's so much left out of day trading education. I can rant I'm not going to, but I could. Let's see. This was nice right here. Look. It's always easy to see stuff in hindsight, right? So if you look at this, so let me show you. Now I see why I didn't trade this. So you come down, nice volume to the downside, and I'm taking notes real quick. So big push down, kind of base is right here, and then each high is lower, right? So it's kind of a wedge pattern. It comes down. And so a lot of times I would think, cool, that's the kind, I like those kind of patterns. I like strong descending wedge patterns. I'm taking some more notes here. Right, and then it broke that bottom, and look, when it broke, it just, I mean, price collapsed. It was 70-cent move, 70-cent move. Now, why did I not trade that? Well, let's look over here. Let me scroll this over. Look at this area, right? You have support, scroll back even more. So that was, I'm sorry, support was right here. Then you hit resistance. And so I don't want to bet against that. I don't want to bet that it's going to shoot through those, because even if it knocks, it may come in and kind of consolidate. So, you know, this looks like a good setup, but in my opinion, it's not. I mean, it worked out, but I mean, that's the thing about trading. Anything can happen. I mean, anything could happen. One of the big things I focus on is probabilities versus possibilities. When you're trading, anything's possible. I don't care about what's possible. I want to know what is probable. And that's what's important. I see a lot of these, oh, look, it was possible, this and that, and whatever, and they have these trades, but they don't really talk about probabilities. So let's see what GE is doing now. They may be finding a new, just maybe the level right in here. I don't know. I don't know what's. If you have to think about it too hard, don't trade. All right, so it's just about 10:30, and I'm not seeing a whole lot. So I just want to go over a couple of things, just kind of a couple of things I've noted. So first off, one of the strategies I'm working on, figuring out the probabilities, a opening range strategy, right? So you have this opening range bar, this 5-minute over here, and a lot of volume, kind of have somewhat of a wedge pattern, right? So you got this base right here, this descending. So I consider that like a descending wedge pattern on the opening range. And I'm just trying to figure out the entry points, the stop, the profit target. So you have a bar like this, pretty strong red bar. Everything is mainly to the downside. It has a little bit of volume pickup right here, and then it kind of dies out. This looks very bearish to me. So there may be some kind of edge in trading this. But again, you have to have the consistency to be able to do the exact same trade 1,000 times over. You know, I don't, at least that's for me. Everybody's different, but for me, I like some kind of certainty. I don't like guessing at things. You know, when I ran business, my business before, like when let's say like advertising, I could run certain ads and see what worked, what didn't, and I can base things on real probabilities and statistics, right? Not on emotion, not on thoughts. Like, I worked in the music industry. I owned a recording studio. Sometimes I'd advertise for the recording studio. May have a certain ad that I may really like, but just because I like it doesn't mean it resonates with people. Doesn't mean, it's going to drive business. So each one of these trades, I mean, it's like just like a business opportunity. That's why I look at it. So this type of business opportunity, I just got to figure out the stats behind, common conventional wisdom say, oh yeah, sell when it breaks that. Well, that may be good, that may be easy, but is that really probabilistically going to have a better edge than learning how to get in a little higher? It's real easy to see that break there. You got these two lines, this breaks. A lot of people say, hey, sell at this break. Maybe that's a good idea. Maybe it is. But I don't know. So that's what I got to work on those kind of probabilities for that type of opening range bar, strong, it gapped up, had a strong down movement. I mean, we're talking, especially like this, 63.5 million shares. That's huge. Is the stock really going to recover from this? Is it really going to make a big run up? What probabilistically is that going to happen? I don't know. I haven't run the stats yet. That's the stuff I'm working on. But this seems like a possible short. You have a stock, gaps up, huge volume, pushing it down, kind of a descending wedge pattern, look to short. But I have to figure out exact entry point, stop loss, profit target, so I can make it a repeatable strategy, not just something I'm winging. The other thing, let's see, I'll take some notes here. The 9 EMA, we talked about that. Let's just kind of see how it reacted. Here, kind of hit the 9 EMA, bounced up. Look how it just kind of rides it. Interesting. This shot right through it. Really didn't care about it. Came up. That's interesting. Had a real indecision bar right here. Didn't really know. And then it came back down. Shot right through the 9 EMA. Comes back up and it kind of seems to be doing something with it. This again. Not really anything. This bounced. This had a decent bounce. This not really much of anything. This kind of seems to be right in. So that's the important thing when you're looking at these things. It's really easy to find the chart idea or the chart pattern that matches your idea. And I see this a lot with trading educators where they're like, oh yeah, the 9 EMA, and all they're going to focus on is a stock like this where it bounced. 9 EMA, look at that perfect pattern. It did it. But they're going to ignore, oh, look, another one. Here's it kind of bounced off the 9 EM. Great. But they're going to ignore stocks like this where it just goes right through it, where there's no bounce or anything. And you have these at least I do. I've had these biases in the past where it's like, I don't know what it is. Something in our brain, some kind of psychology within us that really We want to focus on the things we think are true. I mean, you look at it in politics or religion or anything else, you have a certain idea, and even if there's direct contrary or contradictory evidence, you're still going to hold fast to that idea. You know, and some people have the idea, hey, 9 EMA, let's trade it. But okay, what about if there's evidence saying that it's not a good trade? So that's what you got to gather. You really have to gather it on both sides. And that's why I love building algorithms and you know, because those don't lie. The numbers don't lie on those. It's going to tell you, hey, this works, this doesn't work. And you can't do it in your head. You can't just look through it and think you have a good idea, because your brain just, it doesn't, it's this thing called recency bias, where you're kind of biased towards the thing that has happened most recently. So if over the last few trades, you've noticed that the price bounces off the 9 EMA, that's recent in your head, then you're going to be biased towards that type of trading strategy, because that's what you've seen work over the last couple of days. It's what's recent, it's what's in your head. Even if, you know, the last 100 days before that, it totally wouldn't have worked, whatever was recent in your head is kind of what people tend to drive towards. So that's why it makes trading so hard. You come up with a strategy, you trade it, it works for a little while and then it stops working, and you just think, you know, hey man, the last week, the last month, this strategy hasn't been working. Okay, well, if you take a 5-year period, that strategy may work really good. You're just having 1 month where it's not working. But since that month just happened to you and you're feeling that, then what you do is you begin to think, oh, maybe this strategy doesn't work, because it hasn't been working the last month, last week, the last 6 months. There's professional traders who will trade for a whole year and not make any money at the end of the year. That's crazy. Imagine that. Or they'll lose money, but they're still pros. You know what I mean? They're still moving multi-millions and billions of dollars, but they'll have a year where they've actually lost money. Could you imagine working for a whole year and then having to pay whatever your job is now? Just think about it. If you make, you know, 100 grand a year, imagine doing that same job, only you have to pay you have to pay your employer 100 grand. Like, you don't get that money. And it's kind of what the market is. You know, there's these guys who trade millions and or billions of dollars, and at the end of the year they owe money. But anyways, I think that's going to wrap it up for today.